It's not exactly a massive correction, David, but when you see a triple-digit loss close to losing about 200 points, makes you wonder if the market is seizing upon downward momentum. Let's break down the action. We have Joe Bell, Schaeffer's investment research senior equity analyst, who thinks the market actually has a lot of steam left. Then we just flushed in Christian Magoon. He's YieldShares founder and CEO. He sees a lot of volatility ahead, but has the best way for investors to play in. And then bring him in, Lincoln Ellis of Green Square Capital, down in the pits of the CME. Lincoln, does anybody worry down there in the pits about what happened today? Or do you have a reason as to why this happened?
Well, I think that the outlook here is really one of volatility. It's really around the uncertainty, both that was produced around the jobs number, that's going to be produced around both the producer prices numbers that we're going to get later in the week, and the inflation, the CPI numbers. Once you put that all together with the complexion of the labor market that we got from the BLS, one has to wonder whether or not profit margins and sales are going to continue at the pace that really justifies the kind of multiples that equity markets have been trading at, certainly in terms of not just the price, but the trajectory at which we saw coming out of 2013. And the guys behind me today voted no.
Right. Well, Joe Bell, there's no question there's a lot of money coming back into the market from insurers, from pension funds, even from retail investors who are getting back in. But could today's loss spook those investors getting back into market?
Yeah, it's all about the time frame, really. You look at, from a short-term perspective, we finished 2013 December incredibly strong. So from a technical perspective, perhaps we were a little bit overbought in the short term. So this consolidation to start January wasn't a real surprise. Today we actually broke those January lows. Short term, perhaps a check back to 1810 would make sense. That's the previous December high, or November high rather. And perhaps that's a buying opportunity. But bigger picture, I agree. I think there's a lot of retail investors, mutual funds, cash levels at 6-year highs. A lot of money sort of waiting out there to potentially buy this pullback, and I think we'll eventually see it resolve to the upside.
Christian, give me a word. What word is describing your investment strategy right now? Because there are many cross currents, whether it's worries about the economy or belief that the economy will do well, opportunities in emerging markets. What word best describes what you're telling clients?
Yeah, Liz, I would say cushion. Have some cushion or margin of safety right now, given all the uncertainty. And you can do that a variety of ways. Perhaps it's through some dividend income with your investments. Perhaps it's buying some investments below their net asset value. But have some cushion, some margin for error as this indigestion kind of works itself out in the marketplace.
All right. I'm looking down at my belly when I think of cushion. You mentioned indigestion. I couldn't help but to go there. Lincoln Ellis, we had this spectacular third quarter GDP number of 4.1. I say spectacular by recent standards, not historical standards. Was that 4.1% figure a complete fluke?
I don't think it's a complete fluke, but you have to remember what it was made up of, and most of it was inventory builds. And what you need for when you have these inventory builds is to make sure that you get a pull-through. A demand side of the equation really has to be there to meet that supply. What we saw in the labor market, not only in the last report on Friday, but across the balance of 2013, was a real discrepancy in terms of wage gains and the types of jobs we were putting into the economy: leisure, hospitality. The median income in those jobs is $18,000 a year. That's not a middle-class wage. And the wages of the median across the board are $34,700. Neither one of those are middle-class wages that are going to pull through the kind of demand that the 4.1 number supposes.
Right now on our screen, we're showing some S&P laggers. Kohl's Corporation is in there. Joe, it brings me to retail. I know you've liked that sector in the past. Do you continue to? That, of course, with the backdrop, the overhang, are being superimposed over the hacker attacks.
Absolutely. There's a lot of concerns with that sector right now. Actually, at a pretty pivotal area, it broke below the 85 round number level on the XRT ETF, a popular ETF on retail names today, which also coincided with the 80-day moving average. December retail sales come out tomorrow. I would like to see that level retaken and show some technical strength there before I sort of catch that falling knife.
Are there names that you really believe in right now that you think will hit it out of the ballpark tomorrow?
Sure. If you're talking about individual retail names, some names I like longer term are TJX and ZQK. Both those pulling back to some potential support areas. Analysts yet to sort of buy into those strong trends, and even a lot of short sellers targeting those retail names. I think those still have a lot of upside.
Christian, financials did not do well today. Of course, this week we're going to be reporting in a lot of the financials. Why do you like them? If you do like them, perhaps now's the time to get in on a down day like today.
Yeah, exactly, David. I mean, if you take a look over the last few years, they haven't participated in the recovery as much as some of the other sectors on the S&P have. And now I think some of the financial stocks are starting to do that New Year house cleaning and trying to make some settlements with the government, some of the litigation issues overhead their balance sheets. And I think that is going to help their balance sheets going forward in their prognosis.
Christian, let me just go real short term. Would you buy tomorrow morning before all the reports come out for the financials, or would you wait till the end of the week?
I'd wait till the end of the week. I think it might be a little too dicey coming off this last quarter to make any bet on what things are going to what numbers are going to look like tomorrow. I think you wait. There's been some nice announcements even in the last week about some settlement options coming through on the financials. So I say you stay put until after earnings.
I'd like to just quickly get a touch on metals, and perhaps, Lincoln, you can talk to us about the behavior. Silver in particular suddenly started to perk its head up, but at $20 an ounce. I mean, that's a far cry from the 40 people were looking at just about a year ago.
Yeah, I mean,
so silver was
the actual.
Oh, sorry.
Go ahead, Lincoln.
So the production number on silver is about 1950. It seems to bounce off that $20 level with interest once we get over the $1,200 level in gold. So you see a little bit of shifting in investor appetite just on a dollar for dollar pari passu basis between how one is getting their precious metal exposure. The more interesting of the metals, obviously, to our minds in the longer term is the copper price, and that's been very volatile over the course of the last couple of weeks, really trying to digest whether or not the kind of growth that we saw in the developed economies will transfer back out into the emerging economies. It's a big question for 2014.
All right. By the way, Christian wanted to get into silver because he thinks it's a global recovery play. But, Joe, I want to talk about gold for a second. We saw a little pop today, up $6. At what point would you get into gold or back into gold?
Yeah, I think it's an interesting technical setup here. If you look at a longer-term chart, it's potentially forming a double bottom here. Going back a couple of years, there was so much getting into gold as the inflation hedge. All of a sudden, when we look at a lot of the polls and different things we look at to measure sentiment, we're actually seeing quite a bit of pessimism toward gold. So could be a tradable bottom, I think, over the short term, but perhaps like longer term, I see a lot of consolidation, not a lot of net movement right now going out in the intermediate term.
Okay, good to see all of you. Thank you very much. Joe Bell, Christian Magoon, Lincoln Ellis. We'll come back to you shortly for the